Indian HNIs flocked to crypto, U.S. reforms spark Bitcoin rally, market insights.
The surge of interest in cryptocurrencies among Indian high-net-worth individuals, HNIs, is a noteworthy trend, especially following recent reforms in the United States. Just last Friday, President Donald Trump signed a significant stablecoin bill into law, proclaiming that the cryptocurrency sector is poised to become stronger, bigger, and better than ever before. This announcement has coincided with Bitcoin reaching new heights, as public sentiment gradually recovers from a sell-off triggered by tariffs earlier this year. The excitement surrounding a potential bull market is now making waves in India, where an increasing number of affluent investors are turning their attention to digital currencies.
HNI clients are eagerly participating in the crypto rally.
Currently, Bitcoin ETFs are experiencing unprecedented popularity, with capital inflows reaching $70 billion. Remarkably, the value of these investments has doubled to over $150 billion within just 18 months of their launch.
In comparison, gold ETFs have not achieved such impressive returns in the last 2 decades, stated Edel Patel, CEO of Mudrex, in an interview with Money Control.
In a remarkable development, the trading volume for HNIs on the platform surged by 30% in just 1 week, reaching $10 million. Additionally, CoinDCX reported that the average trade size for HNIs increased by nearly 25% to 30% in July, rising from approximately 5 rupees lakh in June. The crypto trading platform has noted that nearly half of its total trading volume is now driven by over 3,500 HNIs, family offices, and institutions, with an average monthly trading volume exceeding 50 rupees lakh in spot markets. Exchanges like CoinDCX, CoinSwitch, Mudrex, and ZebPay have witnessed a significant uptick in participation from Indian family offices recently, with many investors gravitating towards established blue-chip tokens such as Bitcoin and Ethereum. Reports indicate that Solana and Ripple are also attracting HNI interest across various exchanges, while meme coins like Doge, Pepe, and Shiba Inu are rounding out the list of popular investments.
Current crypto regulations in India.
In March 2020, India legalized the trading and holding of cryptocurrencies, albeit with certain restrictions and a steep 30% tax on profits derived from sales, trading, or spending. An additional 1% tax deducted at source applies to transactions exceeding 50,000 rupees within a financial year.
The government categorizes these digital currencies as virtual digital assets under the Income Tax Act, and they are not recognized as legal tender. Furthermore, unregistered exchanges and wallets are prohibited, and Know Your Customer (KYC) registration is mandatory for anyone engaging in cryptocurrency transactions. The ambiguity surrounding regulations and the high tax rates have made many investors cautious about entering the crypto market in recent years. However, leading exchange platforms have reported a significant shift in public sentiment this year, with Indian HNIs opting for more balanced and smaller investments on a monthly basis. #US Crypto Week Rally.
Currently, the Trump administration is celebrating Crypto Week, as the House has passed 3 pivotal bills aimed at enhancing the legitimacy of the cryptocurrency industry through new regulations. The first of these, known as the Genius Act, was signed into law by the president on Friday. The other 2 bills aim to establish a new market structure for cryptocurrencies and to prevent the Federal Reserve from issuing a new digital currency, both of which will now be forwarded to the Senate for consideration.
Why India's wealthy are choosing Bitcoin over gold, a financial revolution. In India, a fascinating transformation is underway as affluent individuals trade their age-old gold investments for the modern allure of Bitcoin.
This shift marks a pivotal moment in how wealth is managed and preserved, raising questions about tradition versus innovation.
But here's where it gets intriguing: what's causing this change, and could it redefine financial strategies for generations to come?
For centuries, gold has reigned supreme in Indian households, symbolizing not just wealth but also trust, security, and cultural heritage.
From dowries to family heirlooms, gold has been deeply woven into the fabric of Indian society. However, the winds of change are blowing, and many wealthy Indians are now eyeing digital currencies like Bitcoin as a new way to diversify their assets. So, what exactly is driving this trend?
According to Edel Patel, CEO and co-founder of Mudrex, global interest in cryptocurrencies surged after recent U.S. elections, boosting confidence among investors worldwide. In India, high-net-worth individuals, HNIs, and family offices are increasingly incorporating crypto into their portfolios. Typically, they allocate around 2 to 5% of their investments to digital assets such as Bitcoin, Ethereum, and Solana, which collectively account for nearly 70% of these allocations. Bitcoin's growing appeal lies in its evolving role within mainstream finance. As institutional adoption grows and regulatory frameworks become clearer, Bitcoin is shedding its reputation as a volatile, speculative asset. Sumit Gupta, co-founder of CoinDCX, notes that even the mindset of affluent Indian investors is shifting from questioning whether they should invest in crypto to determining how much they should allocate. Major developments, such as BlackRock launching Bitcoin exchange-traded funds, ETFs, signal that Bitcoin is no longer just for tech enthusiasts, it's becoming a legitimate part of the financial ecosystem. But let's address the elephant in the room: investing in Bitcoin isn't without risks. While its potential for high returns is undeniable, so too is its notorious volatility. How do India's wealthy navigate this delicate balance? Experts suggest that these investors approach crypto with caution, often limiting their exposure to 2 to 5% of their total portfolio. This conservative strategy allows them to explore the upside of digital assets while safeguarding the stability of their overall investments. Himanshu Maradia, founder and chairman of SIFTAC, highlights another compelling reason for this shift: the impressive returns offered by Bitcoin. With an annual compounded growth rate, CAGR, of nearly 70% over the past decade, Bitcoin far outpaces gold's modest 6 to 8% gains. Wealthy investors view crypto as a small yet impactful slice of their portfolios, typically around 5 to 8%. To manage risk, they rely on family offices, professional fund managers, and secure platforms, ensuring their digital holdings remain safe and compliant. Interestingly, much of this movement is being spearheaded by the younger generation. Tech-savvy heirs are introducing discussions about crypto at dinner tables and boardroom meetings alike. These forward-thinking individuals are influencing family office strategies, advocating for greater inclusion of digital assets in wealth management plans, and even integrating crypto into estate planning. As Maradia puts it, the next gen push is real, and it's reshaping how families think about diversification. Despite Bitcoin's rising popularity, gold remains irreplaceable in terms of emotional and cultural significance. However, Bitcoin offers something unique: a digital, scarce, and borderless store of value. Rather than replacing gold, it complements it, providing a modern twist to traditional wealth preservation. Maradia predicts that Bitcoin could constitute 5 to 10% of HNI portfolios in the coming years, driven by younger investors and innovations like Bitcoin ETFs. Yet, challenges persist. Bitcoin's price fluctuations are significantly higher than gold's, and India's 30% tax on crypto profits, along with a 1% transaction deduction, can erode earnings. Savvy investors counteract these hurdles through meticulous planning, secure storage solutions, and expert guidance. Looking ahead, experts agree that Bitcoin won't displace gold but will carve out its own niche alongside it. Patel envisions a future where regulatory clarity and improved digital infrastructure encourage more HNIs to embrace Bitcoin, particularly those who see it as digital gold for the 21st century. Gupta echoes this sentiment, emphasizing that the goal isn't replacement but diversification. Ultimately, gold and Bitcoin represent two sides of the same coin, one rooted in timeless tradition, the other embodying cutting-edge innovation. Together, they illustrate how India's wealthy are blending the old and the new to forge a dynamic future for wealth management. What do you think? Will Bitcoin truly stand the test of time, or does gold remain unmatched in its legacy? Share your thoughts in the comments below. Exploring crypto adoption, trends and predictions for 2025. Crypto adoption, the tipping point, uncover the surprising truth behind the global surge in digital asset usage, and what's driving this phenomenon in 2025. Imagine a world where cryptocurrencies are no longer the outliers, but an integral part of our daily financial lives. Welcome to 2025, where crypto adoption is not just increasing, but transforming the way individuals, businesses, and governments interact with digital assets. But here's where it gets interesting. What exactly is crypto adoption, and what's fueling this global growth? Demystifying crypto adoption. Crypto adoption refers to the widespread integration of digital assets, such as Bitcoin, Solana, and USDT stablecoins, into various sectors. This encompasses trading, payments, remittances, and the utilization of blockchain-based financial services.
Key indicators of adoption include wallet creation, transaction volume, institutional participation, and regulatory engagement. The perfect storm, drivers behind crypto adoption rates. Several factors are converging to influence the pace and direction of crypto adoption worldwide. Economic conditions, regulatory clarity, and access to digital infrastructure are crucial in determining whether individuals and institutions engage with digital assets. In higher-income regions like North America, institutional demand and regulated investment products play a significant role. In contrast, emerging markets are driven by the need for financial access and currency stability. Financial inclusion, crypto's unsung hero. In regions where traditional banking is scarce, crypto is bridging the gap. Sub-Saharan Africa, for instance, is witnessing a surge in stablecoin adoption to combat inflation and navigate foreign exchange shortages. Countries like Nigeria and Ethiopia are at the forefront of this movement. Decentralized finance, DeFi, is also expanding access to credit and savings tools, reducing reliance on traditional banks. But here's the question: can crypto truly be the catalyst for global financial inclusion? Crypto as an inflation hedge, fact or fiction? In economies plagued by rapid currency devaluation, crypto, particularly Bitcoin, is gaining traction as a hedge against inflation. With its fixed supply, Bitcoin offers a scarcity that contrasts with inflationary monetary policies. Is this a viable strategy, or a fleeting trend? The tokenization revolution. Representing real-world assets as digital tokens on a blockchain is transforming ownership, investment, and liquidity. This process, known as tokenization, enables assets like real estate, stocks, or commodities to be divided into tradable units. Will tokenization be the key to unlocking new investment opportunities, or does it pose unforeseen risks? Examining global crypto adoption, a tale of two worlds. A recent report by Chainalysis revealed significant regional differences in crypto adoption, influenced by economic conditions, regulatory frameworks, and access to digital infrastructure. In North America, institutional investors are driving adoption, whereas in Asia, grassroots adoption is on the rise, led by countries like India, Vietnam, and the Philippines. The role of large institutions and governments, regulation or innovation? Legislation like the Genius Act and the Clarity Act in the United States aims to establish a defined regulatory environment for digital assets. Will these efforts encourage or stifle innovation? Meanwhile, some governments are exploring regulated pathways, while others maintain a restrictive stance. Barriers to mass adoption, overcoming the hurdles. Despite growing interest, key obstacles remain. Market volatility, security vulnerabilities, and regulatory uncertainty are deterring potential users. Can these challenges be overcome, or will they hinder crypto's mainstream acceptance? Expert predictions, a glimpse into the future. Regulatory clarity is seen as the linchpin for the next phase of crypto adoption. But what about the potential for crypto to transcend traditional financial markets? Experts weigh in on the role of Bitcoin in advancing global financial access and individual freedom. Real-life examples, crypto in action. From the U.S. Federal Housing Finance Agency's directive to consider crypto as a reserve asset in mortgage risk assessments, to Gridless Compute's use of Bitcoin mining to support rural energy infrastructure in Africa, crypto is solving real-world problems. These examples are just the beginning. What other innovative use cases will emerge? The bottom line. In 2025, crypto adoption is not just a trend, but a transformative force. Driven by concerns about inflation, efforts to promote financial inclusion, and growing interest in tokenized assets, crypto is finding traction across industries and regions. While challenges persist, practical use cases are proliferating. As crypto evolves from a speculative asset to a functional part of the global economy, one question remains: what's next? Share your thoughts. Do you think crypto will continue to surge, or are there unforeseen obstacles on the horizon? ****